Why, hello there. Good morning, good afternoon, or good evening. Whatever time it is for you, thank you so much for stopping by and welcome to tonight's stream. It's tax time. Oh, happy early birthday to your brother. That's all good. I don't believe that I will have to work late this week. We'll see. We've been doing pretty good on the not having to work too late, but as we get closer to deadlines, we'll see. But yes, it's tax stream. Tax time. Okay, we're gonna have to pause it, and I'm just gonna pop over here. Hello, it's me. We're gonna turn off the music credits because we're actually... Here, I'm gonna come closer to you guys. Hi. I'm also gonna put on my glasses. But I want to listen to Animal Crossing music, so we're gonna turn on some Animal Crossing music. So let me get it up. Do. Sure, we'll do this. Exactly. No, actually, Tom Nook does not charge taxes, which is wild. It's tax season, everybody. Welcome once again to the yearly... Well, for me, it's the yearly grind. For other people, it's, just the yearly no fun. I mean, not that it's tons of fun for me, but I like doing taxes. It's not too difficult. So yeah, it's time to talk about taxes, talk about fun stuff. If you haven't done your taxes, it's time to start working on that. Yeah, it's gonna be Zatika's brother's birthday on this Tuesday. So we wished him a quick happy birthday. Happy early birthday. Yeah, there's Animal Crossing going on in the background. Because taxes are a very stressful thing for a lot of people. So I'm gonna put some chill music on. But yeah, if you have not already done your taxes, now's a good time to get started for them. Well, hi, Kitty. I've actually finished prepping mine. You should pay your taxes. Bad. But yeah, I actually am working on my own currently. I finished up my bookkeeping last night. Hey, I have to say it. I work in taxes. I gotta say, you guys doing your taxes? Are you guys doing your taxes? Yeah, for most people, it's gonna be pretty easy. For most people, it's pretty easy. Please remember that this year's deadline is... It's the 15th, right? Yes, it is Monday, April 15th. That is your deadline for paying and filing an extension. Or you could file your return by that day. Either one works. Reminder that an extension of time to file is not an extension of time to pay. You have to pay by April 15th. It sounds weird, and it does. But you can make a guess about how much you're gonna owe. If you think you're gonna owe, and you can make a payment on April 15th for what you think you're gonna owe. And then, when you finish filing your taxes, some states have an automatic extension to October, but the federal tax return does not. Yep. So yeah, state taxes differ by state, quite a lot of them follow the federal, which they're due on April 15th. Some give you an automatic extension until October. Some are May. State taxes are weird. State taxes are weird. They're funky little bitches, to put it lightly. But yeah, general tax talk stream, information sharing stream. As a reminder, I do not have a license, so this is not advice. This is just me sharing what I've learned. How many states have I done taxes for? I've done, well, a lot. Especially if you count business and personal as separate. Massachusetts, New York, Connecticut, Ohio, North Carolina, Pennsylvania, Georgia, New Mexico, Arizona, Arkansas. I have done California. I've done quite a lot of California. As well as Colorado, Nevada, Massachusetts. A lot of fucking states. A lot of fucking states. I also have done international taxes for people who have paid and own things internationally. I don't do their taxes in other cities, in other countries. Yeah, I'd say probably about over half. Yeah, so I've done taxes for people who have their money coming in from like France and Malaysia and Singapore and New Zealand, Britain, all sorts of places. They're pretty fun. I mean, I think it's fun because it's like a big puzzle for me. But yeah, this year, how many times have I had to explain fraud? None this season. None this season. I mean, like, I've explained, like, to people who are afraid, like, on, like, what was it, like, last week or something? The week before on the anime, on our, anime movie nights. Oh, blessings. Where I was explaining what fraud actually is, and what it's not. Most of my explanations of what a fraud is, what it is and is not. But yeah, I think there is one state with a funky filing deadline.
All right. File your taxes, or else I'll hack your new Carnival account. More Kuya funds for me.
How many times have I had to disarm an ancient nuke? None. None, thankfully. How many times have I sighed and looked at spreadsheets and gone, I'm gonna have to do this all over for you, aren't I? A few this year. A few. But yeah, we actually have some questions to talk about real fast. So let me go bring them up. Was it Missouri? It might have been. There is some, there's one state or something that has like a, oh, I forgot, I've done Louisiana, Georgia, Alabama, that kind of stuff. Basically, if a state has taxes, I'm about 50% likely to have done their taxes. Or done a tax return for someone who has taxes from that state. I've also done Hawaii. Hawaii's funky. So is Kansas. Yeah. There's certain states that have a very fun tax law. Some states are very fun because I think the one I'm thinking of is either Missouri, Mississippi, or Pennsylvania. I think it might be Pennsylvania that I'm thinking about. But there is a state that basically, a lot of states won't tax income if it's earned in another state. So like, if you have income from New York and income from California. New York is pretty much really... this is me picking random states because I don't think they're like Pennsylvania. Hello. So like New York is only going to tax income coming from New York. California is only going to tax income that's coming from California. Pennsylvania is a fucker. Pennsylvania is a fucker, and it says, hey, where in the world did you make that income? Not from Pennsylvania? Cool, don't care. We're taxing you on that. It's a bitch to deal with. It's a bitch to deal with. But yes. As well, a reminder that IRS Free File is open for certain people. Certain people. You have to fit a fairly narrow guideline, but it should hit quite a lot of people. I don't remember what states are currently in effect. What states they currently allow. I know it's states that don't have state taxes. Yes, pay your taxes. All right, IRS Free File. Who is eligible for the IRS Free File? All right, so the IRS does have an adjusted, a guided tax software. No, and in fact, I wouldn't trust that Steam game. I wouldn't trust any game that asks me to input my social security number or anything like that. Plus, you have to, that kind of stuff, but there's licenses for these things. If someone tells you how to do your taxes, they gotta get, licensed. Or the IRS is not very happy about that. All right, where is it? Okay. Okay, yes. So things like IRS Tax Act has yeah. So a lot of states are not included in the free file stuff, but like they're trusted partners. Some of them are like, yeah, they can do Arizona, Indiana, Montana, Vermont, Washington, West Virginia. You know? Yeah. Just fucking open yourself up to identity theft. But yeah, IRS Free File is open. Oh, there's SiriBot. Hi, SiriBot. Welcome in, SiriBot. Yeah, the bot needs to do taxes too. That it does. Well, SiriBot's owner will have to do taxes if people pay for SiriBot, which a lot of people do. A lot of people donate, tip for SiriBot, and that's income. That's income. But yeah. Question. There was questions. We have 3 questions from our lovely Chilla. Yeah. Ah. Okay, so that's a great question. So here's the fun thing about... First we have to talk about... First we have to talk about definitions. The definition of a donation. What is the definition of a donation to the IRS? Well, the definition of a donation is something that is given to a Section 501c3 charity, or some similar charity. It has to be registered with the IRS, and they still count it as income. So, no, when you dono to a streamer, to the IRS's eyes, that's not a donation. That's income to that taxpayer, the streamer. Yeah, so if you say you tip me $10, I have to record that income. You dono $10. I have to record that income. It's just the different words. We can use words such as donation and tip in the real world. Out in the real world, not talking to the IRS, but to the IRS, those donations are not donations. They're tips. So, surprise, surprise. If someone gives you something, this is my understanding. If someone gives you something with no intent of receiving services or any sort of thing from it, you didn't, you know, if I go out and clean someone's yard and they gift me $10, that's not a gift. That was them paying. Well, they'll still have to report it to the IRS. Because those are still tax-paying entities, is my understanding. Yeah, so, however, if someone just gives me, so like the throne stuff, to my understanding, that's not income. You guys are just giving me things. Yeah. Fun. I answer these English questions, or I'll never get back around to them. And that's... that we are very much the VTubing and streaming and this kind of online economy stuff is very much a gray area in the IRS's eyes. They haven't released fixed guidance for it. So a lot of it is just do what you think is right in accordance to guidance for other industries, which is fun. That's always fun. But yeah. I got yawn. Okay. First question. What do I think, in my personal opinion, are the cutoffs when people go from self-filing to TurboTax to needing a whole-ass professional? That's a great question. That's a super great question. I would say if you have like a single W-2, AGI limits are a little funky. I am not 100% certain where AGI limits fall for some of these other with like other software and other providers when you hit free file and when you actually like have to pay for stuff. But mostly if you have a W-2, maybe like an interest account, like you have an INT, 1099 INT, you got some interest over the year. Yeah, adjusted gross income. Oh, that's... See? I'm so into this. I'm so immersed in this world that I'm just gonna rattle off shorthands without thinking about it. Because adjusted gross income is a fucking mouthful of a word. But yeah. Yeah, so your adjusted gross income is your income after, and I always get this mixed up, which is why I always have the forms in front of me. 2020 1040. Yes, okay. So your AGI is all of your income added up and then reduced by your adjustments to income for your adjusted gross income. Ain't that a fun one? So what could be your possible adjustments to income? Well, that's on your Schedule 1, which is things such as refundable credits, alimony, business income, gambling income, jury duty pay, taxable distributions from an ABLE account, scholarship and fellowship grants not reported on a W-2. Crazy amount of stuff. And all that adjusts your income. Yeah, you'd think. Well, that's because it's net. They actually don't give you net. It's adjusted gross income and then taxable income. Total income, adjusted gross income, and then your taxable income. So most people say, okay, so let's say Joe lives in Florida where there is no state income tax. Joe makes $30,000 a year working at the nearby grocery store to his apartment that he rents. Joe does not need a tax professional. Unless Joe has problems. Unless Joe is like, I don't want to do this at all, and I would rather pay someone to do this. Joe doesn't really need a professional, and I'm pretty certain that Joe falls under quite a lot of the free file options. So it's all dependent on personal desires, though. Joe could be in withholding jail. Joe may be fucking up his withholding, in which case he may want to talk to a tax professional. Just like hey, can you help me figure out like how not to owe? He may want to do some tax planning. That's figuring out how not to owe. In which case, it'll end up being payment planning, which is how to pay your taxes. And most likely that tax professional will say, well, Joe, up your withholding. That's what you do, Joe. You just gotta up your withholding. When you start getting into things like you have a brokerage account and you're selling stocks, or you have a business, like a side business, or you have a rental house, or like when things start getting a little more than just you work a job, that's when you're probably going to want to be using a software. And you're probably going to be most likely going to be paying for that software. And if you don't know what you're getting into, if you have no idea what you're doing, you might want to pay for, Nope. Well, yes and no. Each employee has to give their employer a form that tells them how much to withhold. That form is called the W-4. The W-4 has changed so much recently. Yeah, the current W-4 is a piece of hot garbage. It's a piece of hot garbage. Nobody gets it right because it's a confusing piece of garbage. I honestly hate what they've done to the W-4 recently, because it's just confusing. They're like, take a look at this. Yeah, it's like, take a look at this different, at this graph, this spreadsheet. If follow along on the, x-axis and y-axis, how many people work a job and what their average income is, and this is technically how much you should be withholding. It sucks. It sucks. And usually, actually, it's you can't withhold 0 unless you specifically put, I am not subject to withholding. Like on your W-4 where you put don't withhold, you can put don't withhold for me, I'm not subject to withholding. That's the only way you can get a 0 withholding, or your payroll provider fucked up somehow. Okay, have fun, Pudding. Sure, alright. But yeah, when you start getting into, like, yeah, so there is no real kind of default. And basically, the tables of withholding also are very dependent on what the payroll provider software has in theirs. So sometimes they don't update their payroll provider. The payroll provider doesn't keep up to date their withholding tables. It's funky. Withholding is a very integral part of taxes, of US taxes, that is extremely difficult to get right. Extremely difficult to get right. But yeah, I'll say once you start getting into the like, oh, I've got stock and interest and dividends in like these 4 different brokerage accounts. I've got 2 rental houses, one in Oklahoma and one in New York. And see, ADP and Intuit don't like each other that much. Because Intuit also does payroll processing. But yeah, so yeah, when you start getting into like adding on and adding on and adding on of stuff, yeah, that's when I would suggest it's time to look into getting your taxes prepared. Especially if you have multi-state, that stuff is just the fucking pits. You're probably gonna want someone else to do that for you. You are probably gonna want someone else to do that for you. If you can do it yourself and you feel confident in what you've done and you trust the software that you're using, etc., more power to you. Most people do not feel fucking confident doing their own taxes. Most people do not feel confident doing their own taxes. Yep. Or if you work in, like for the rental house example, if I live in Tennessee, for example, and I have a rental house in New York, that means I have New York-based income. So I have to file a Tennessee state tax return for the money that I make in Tennessee and a New York tax return for the money I make in New York. Ain't it funny? Ain't it funny? It's funky. So when you start getting into that stuff, if you have international fucking anything, if you have stock agreements, stock plans, employee stock options, that shit is funky too. Well, actually, to the IRS, LLCs don't exist. You should report that on your personal income tax return. LLCs are state-based only, and the only thing they do is silo out your liability. They don't do anything for you tax-wise. Biggest misconception about LLCs. Which is funny because your next question. The next question we have is, did I make an S-Corp for VTubing? And was it worth it or is it necessary? So I did not make an S-Corp for VTubing. I'm going to pop down right on the ground here. Full out on the table. You likely do not need an S-Corp. Most people do not need an S-Corp. Most people, if they make an S-Corp and they don't know what they're doing, are getting themselves in a shitload of trouble. S-Corp is a completely different beast than anything anybody has ever done if they have not already done business taxes before. If you have not already filed a partnership, S-Corp, or C-Corp tax return, you do not know what you're doing. Stop, take a deep breath, go find someone to talk to. People do not realize that as an S-Corp, you now are a completely separate legal entity. You have to file your own tax return as a separate legal entity. That entity has to have employees. Mostly. And if you, as a taxpayer, work in the S-Corp that you own, you have to pay yourself wages, and there are special rules if you're a greater than 2% shareholder. Yeah. There are special rules if you're a greater than 2% shareholder of the S-Corp where you're being paid, such as health insurance being put on your W-2. Distributions that you take from your S-Corporation in just a regular old Schedule C LLC, that's just your money, you're taking it out. S-Corporation, no, now you have to start tracking your basis, fucker. So now you have to keep track of all the money that you take out of the business and all the money that you put into the business for personal use, and you have to make certain that that is tracked on your balance sheet in an equity account. Because if you take distributions over your basis, then those are then taxed at capital gains rates, which are 15 to 20%. No, it's a subchapter S. It is a special form, it's a special part of the corporate tax return. It's a special type of corporation. They can be really helpful. They can be really helpful. They also can absolutely fuck you up. Did you know an S-corp has to file taxes every single year, whether they made no money at all or made money? Hi, Blur. And if you don't, you get fined. You get fined. And it is per shareholder per month. That shit racks up fast. Yeah. You also have to be aware that by becoming an employer through an S-corp, you now have to be very aware of, oh God, I literally had the idea. I literally had the name in my head. Trust fund. That's what it's called. Trust fund penalty. You have to be very aware of the trust fund penalty, which is if the employer does not pay the Social Security and Medicare and withholding and federal income tax withholding of the employees and the business portion of the Social Security and Medicare taxes to the government. If you do not, it is a criminal fucking offense. It is a criminal fucking offense. You have to make your employer tax deposits on the timeline that the IRS tells you. You also have to be aware about state-based disability, unemployment insurance, anything else that your states have. Well, as a US based company, you still have to report all your wages that you're paying to offshore people. Very fun. So yes, S-corp, most of the time, you're not going to want an S-corp. I don't know. You would have to pay taxes earned in that year. For that year. Exactly. As well, if you, there are certain forms that you may have to give to, foreign workers because if you are a US-based company, they'll have made US income. More or less. I'm not fully aware on the other side of things because I don't do countries other than the US. I do know about 1099s. Do y'all know about 1099s? Did you know that if you pay someone $600 or more in the calendar year for services, and they are not an S corporation or a C corporation, you have to give them a piece of paper called a 1099 NEC or miscellaneous, depending on what type of payments you gave for them. Oh, I wish. Oh, I wish. And you have to give them a piece of paper that says, hey, hi, IRS, I paid this person this much money. The IRS is really strict about those. Really cracking down on those. Because they want to make certain that the person on the other end of that transaction is reporting their income correctly. And they are not skimping. So, gasp, gasp. Did you also know that the IRS does monitor bank transfers every so often, and only if they're above $10,000? So, but the IRS also is aware, because they talk with the banks. The IRS themselves don't monitor it, but they talk with the banks who do. If you are consistently making just under the IRS notification limit, transactions. See? Well, they'd still have to give you a 1099-M for rents paid. Say, hey there, landlord, I paid you this much in this year. I don't know. I'm just bad on my water. But yeah, taxes are, there's a lot of reporting and cross-reporting things needed. And finally, Zetetica's last question. How important is it to be Roth maxing? Okay, this one's my opinion. This one is 100% my opinion. I think Roths are heavily underdone. I think more people should be getting Roths. If you are not aware, a Roth IRA is a special type of retirement account. You do not get a tax break for contributing to a Roth IRA. However, that means that you have already paid taxes on that money. Yeah. And so, when you take out that money in your retirement, it is tax-free. I think, if your budget can handle it, that everyone should be attempting to max their Roth out every year. It is also, you know, if you have a financial planner, a financial advisor, they may give you different instructions based on your specific goals, whatever. Basically, if people who know what you want to do give you, don't do this, go with them. But I think a good mix between a Roth IRA and a 401k or a traditional IRA is really helpful. Yes, okay, so you cannot contribute to a Roth IRA if your income is over a specific limit. Which is currently Roth IRA contribution limit. Okay. Oh, that's the contribution limit. There we go. The income limit. So, currently in 2024, you can put $7,000 in a Roth IRA if you're under age 50. $8,000 if you're 50 or over. There is income limits, however. Hello. Okay, yes, and it is based on your modified gross income. Modified adjusted gross income, which is a very fun term that has multiple different definitions depending on where it's coming from. So basically, if you make a modified adjusted gross income of under $138,000. Sorry, that's the 2023 numbers. $146,000. You can contribute full $7,000 to a Roth. I'm going to be totally honest and say that most people are in that range. Quite a lot of people are in that range. Just with the median income. And that is if you file single. So if you have different filing statuses, those numbers change. I'm just going to be talking about single because that's easy. And what I am. Single. That's my filing status. Single. So yeah, I think more people should be putting things in their retirement account if they can afford it. IRAs are good if you need the tax deduction for it. However, do be aware that when you take the money out of the IRA in your retirement, it is taxable. Roth IRAs, you avoid that problem. There's an income limit. Yeah, if you have access to a 401k, yes, I would suggest you max it. If at all possible. max it as much as you're able. Because honestly, you gotta save for your retirement. And you gotta start young, if you can. I mean, I guess you could call it that. It's money that you can access later. But yeah.
Oh, excuse me, sorry.
Oh, that took me by surprise. I had a yawn. But yeah. So, retirement accounts are good to contribute to. If you are self-employed, please talk to a financial advisor, retirement advisor, and tax advisor. The main ones that people do are 401k, traditional IRA, and Roth IRA. But if you're self-employed, please talk to financial advisor, tax advisor, retirement advisor about if you can do things like solo 401ks, a SEP IRA. So that's a great question. Well, yeah, if your workplace offers match. Okay, so self-employed income is where you are in it to make money. You are in to make this a career or to have this be profitable. So like for me, I would love VTubing to be profitable. That is my goal. So I'm self-employed. I'm also traditionally employed. You can be both. It's not a one or the other thing. Not like, oh, I'm traditionally employed, I can't be self-employed. Or I'm self-employed, I can't be traditionally employed. No, you can be both. You can be both. Hobby is like, say I love baking pies. Say I love baking pies. And I, it's my hobby to bake pies. And I go to a bake sale. And I sell my pies. And I make like $30 or something. That's not self-employment. I'm not in the pies to make a profit. So, I would just report that as hobby income. You do still have to report it. Hobby income does not have self-employment taxes attached to it. So, however, if you were in that bake sale to, no. If you gamble, they give you W-2Gs. You report the W-2Gs on your tax return. Sorry, the amount of W-2Gs I've had to enter before. No. Okay, but tis. Alright, fans, we're starting to get up to the technical levels of puns. But yeah, self-employment income has a special tax applied to it. This is because it is to make up for the part of Social Security and Medicare taxes. So if you were traditionally employed, your wages would have Social Security and Medicare taxes withheld out of them, and they would go to the government and pay for those two services. Your employer would also pay a portion. Your employer also pays Social Security and Medicare taxes on your wages. So, however, if you're self-employed, there's no employer sending your Social Security and Medicare taxes in. But the likelihood is you're going to use those systems and you still need to pay into them. So, hence self-employment taxes. They are the portion of Social Security and Medicare taxes that you would pay out of your wages as a W-2 employee. And they go to where they go. Social Security and, my brain is blanking on where Medicare goes. Goes to the Medicare people. And that covers those two services, what you should have paid in if you had been a traditional employee. Hobby income does not have those taxes applied. I'm glad you're enjoying it, Lo. Correct. Twitch, Patreon, etc. are never going to pay those because I'm not an employee of Twitch. I am a contractor of Twitch. I am a subcontractor. I am a non-employee. So I get a 1099 NEC, non-employee compensation, if I make over $600. If, you know, through them, I make over $600 and they pay me. Paid out. Then they give me that form that says, hey, IRS, I gave Prince $601. And the IRS knows then to look at my tax return and say, hey, Prince, are you going to record this $601 of income from Twitch? And if I don't, the IRS goes, hey, you should have done that. And they'll send you a letter that says, hey, you didn't report this income. We're adjusting your tax return to include this income. You now have to do this. You now have to pay this. Or you now get this refund or whatever. Did they send me a 1099? No. No, I didn't hit 1099 levels. Excuse me, goodness gracious. But yeah, so, my brain stopped. Sorry about that. But yeah. So, 1099Ms. That's okay. I had to, my coworker is working today. And he had a question for me. So I had to get on call with him and go, oh, fuck. Crypto taxes. Oh, God, I hate them. Oh, God, I hate them. Yeah, crypto taxes are not fun in the slightest. Did you know? Oh yeah. Oh yeah, there are taxes on cryptocurrencies. Because to the IRS, crypto, whatever coin you have, is just like you have a printer. And you sell that printer. Yeah, like cryptocurrency. Okay, so the IRS technically does not tax crypto in a special way. It's under the capital gains tax. So like if you sold stock, that's a capital gain. And if you made money, it's a capital gain. And so crypto is just treated as capital gains income. Basically, the IRS says it's like a printer. It's like a chicken. You bought a chicken for $20 and then you sold the chicken for $19. You lost $1. Report it. Fun. You know what? I'm probably yawning so much because Kiki was yelling at me to go lay down a bunch today. So I've been laying down a bunch today. My brain was like, okay, sleepy time. True, you could invest in chicken coin. So it's really fun when the crypto, yes. When the crypto, wallets and platforms, trading platforms and stuff that report these transactions, because now they have to report these transactions to the IRS. Sometimes they'll give you a 60-page CSV file of every single crypto transaction. Fuck off! I am not... Yeah, exactly. Your chickens will be safe. There's no foxes in this hen house. So yeah, crypto is probably one of my least favorites to deal with. Definitely one of my least favorites things to deal with. I would say my other least favorite is multi-state corporations. Multi-state corporations have a very special kind of hell with them. Same with multi-state businesses. Just multi-state businesses in general have a special kind of hell. Because you have to apportion out income per percentage of gross income that was made in the different states. So you might have 5% of your income was made in California, but 20% of it was made in North Carolina. So I have to go into the program and say, hey there, program, only 5% of the net income or loss from this Schedule C. Okay, if you bought or sold like a bunch of Pokemon cards, that's technically capital gains. If you sell like baseball tickets on like I'm gonna hiccup. No, I'm not. Am I? It's like no, okay, it was just a throat noise. What if you sold someone's soul? I don't know if that has a monetary value. Oh, no, like multi-state, like say I'm an artist and I sell stuff at cons. I have an artist alley booth at a con. I go to a con in New York and I sell $500 worth of art. Yeah. Then I go to a con in California and I sell $500 worth of stock. Yeah, stock as in like my goods. Not only will I have to deal with whatever the fuck sales tax I have to deal with, because I don't do sales tax. That shit is confusing. When I get back to my home state of wherever the fuck, when I go to file my taxes, exactly. When I go to file my taxes, I will have to say, well, I made money in New York and I made money in California. That is a multi-state business. Things like McDonald's and like Pizza Hut, Domino's, those are franchise stores. So that is usually owned by someone who buys the rights to run under all of the branding and to have all of the like systems and all of that, so that they can open their own McDonald's or Pizza Hut or Domino's. That is its own company and files its own tax return. I've actually had to deal with not one of those companies, but something like that. Yep. Yeah, so they're not all owned by one company. The overarching McDonald's brand is a company. And it basically kind of rents out its brand in that the franchise store has to pay like a fee. So like they may pay like $75,000 a year in franchise fees to be able to use all of the marketing and the like special supplies and to be able to buy the pizza ovens and all that stuff. And you know, they have to follow the franchisor's rules about how they run the company, etc., etc., etc. But they are their own company. They've just entered into an agreement with a parent company to run stuff for them. Ah, great question. That depends on where you do your business. So say I'm in Louisville. And that is the frickin' border of Indiana and Kentucky. So I'm on the Kentucky side of Louisville. I am let's say I have a bakery in Louisville. And I run my bakery in a single physical store in Louisville. I do not ship out my goods. We are like cutting this down into a very easy problem because the answer is it depends. And I really hate to say that most of the answers to most of your questions are going to be it depends. Because the IRS's favorite way of doing rules is if you're wearing blue on a Tuesday, only Section B applies. And shit like that. So I'm giving you, like, under these specific circumstances, it would be this. So I am a brick and mortar bakery. I do not ship my product anywhere. I do not have an online store. You have to come to my brick and mortar bakery. And that's the only place I sell from. You are a Kentucky business because you do not do business anywhere but your one spot in Kentucky. Yeah. Mostly, yeah. So, multi-state businesses, there are some states that have agreements, like New York and I believe Connecticut have an agreement because a lot of people live in Connecticut and then go to work in New York. If I'm remembering which state it is. I know it's some state in New York and I think it's Connecticut. So some states have like tax treaties between them where it's like, okay, if you might have made all your money in New York, but because you live in it might be New Jersey. I don't remember which country it is, but I know New York has a tax treaty with one of its neighbor states because people live there and go work in New York. And it's basically, they have like special ways of doing it and it's annoying. Yeah. Oh, I might be thinking of New Jersey. I dealt with it years ago. Like I haven't had to deal with it in like 3 years. And it was fucking complicated. There's a lot, once you get into state taxes, you get into a lot of complicated stuff. Which is why a lot of times if you have very specific state tax needs, you're gonna wanna go to someone and you need a tax preparer, you are going to want to go to a tax preparer who is in that state. Because they're going to know the most about the laws there. Well, yeah. Each state, that's the problem about being a federation, I believe is the correct term. Or a republic, I don't remember. Basically, we're just a bunch of kids in a trench coat pretending to be a country, but we all have very different ways of doing things. Oh, I'm out of water. I'm gonna go get some water. I'll be right back. Don't take me. I have no idea. Oh, and now I have to cough, really? I don't know. I mean, that's still separate countries with different ways of doing things. I don't know. Oh, excuse me. But yeah, taxes are complex, but I honestly think they're fun at times. When you get into the groove, it's really fun to just sit down with a tax return, all the data, and just pound it out. Blessings. And like getting the answer at the very end. There definitely is a really good feeling about having clients that we help. Hush you. Hush you. Clients that come to us because they don't know how to do their taxes and they're scared and or they've got a lot going on and they just don't know what the hell to do for payments and stuff. And there definitely is a really like good feeling about doing a tax return and then finding out, oh, in this person with like $1 million AGI, we were only off by $2,000, or we were only off by $20,000. Because when you get into those big numbers, being off by $20,000 is not crazy. But there definitely is, there's a really like nice feeling. There's also a really nice feeling when people come to you, because one of the things that we do at my office is we help people who have back taxes. Sometimes it's like 10 years of taxes that they haven't filed, and we help them get back up to date and all that stuff. And like just seeing when they're just really relieved that it's over, and it's well, paying for your tax returns towards your next time paying taxes. Okay, real quick. So this is not directed at you, Phantom. This is a tax person pet peeve. This is a tax person pet peeve. It's a refund. The actual papers themselves are the return. If you get money back, it's a refund. Like the number one way that people get me confused is they're like, I got a return. And I'm like, you got a what? They're like, I got $58 return. I'm like, oh, you got a refund. You got a refund. But yes, actually, there is a way to put your tax refunds forward towards your next time paying taxes. It is I don't know how you do it in other systems. I know how we do it in our system. And it basically takes your refund and it applies it as an estimated tax payment. So say I'm that person who had $1 million AGI. Yep, It's confusing. So say I'm that person who has $1 million adjusted gross income and I have a refund of $20,000. And I say, well, I think I'm going to owe next year, or I know I'm going to make more money next year, or I just don't want to deal with it. Let's just put it forward to next year. We can do that. We can say, hey, IRS, keep this $20,000 applied as an estimated tax payment towards next year. And the IRS goes, okie dokie, we're more than happy to keep your money. You do get credit for it, but the IRS is more than happy to not have to give that money back to you. Well, the IRS doesn't want you getting huge refunds. I mean, if you wanted to, the money isn't going to grow. That money is not going to grow at all. That's going to stay static. And if you have a year that completely drains it, so say you have a year you made bank. And now you used up all of those estimated tax payments. And now you still owe? Well, that money has been used. Now you can't get it because it was used for taxes. I gotta turn things down. My Considering that I have no idea what that is, I'm gonna go with probably no. I do not know what a payroll savings bond is. Yeah, the IRS doesn't really want you to have huge refunds because that means that you're paying money into the IRS and way more than necessary, and the IRS can get worried that you're using the IRS to launder money. So the IRS does not want you to have these huge ass refunds all the time. You could have someone knock on your door and politely ask, "Hey," and like, in a matter of speaking, they're not actually going to come to your door. It takes a long time to get to an agent coming to your door. That's only on like criminal cases and like when you owe like a shit ton of money and they're like, "We are going to be seizing your assets." It would not be a call. The IRS does not call you. If someone calls you and says, "I'm from the IRS," that is a scam. Mostly they communicate through letters and through agents. If someone and the agent will not call you unless you call the agent and ask them to call you back. Oh, that's interesting. I don't know. Maybe. Yeah, so the IRS sends you letters, and the only other way they communicate with you is, and this is in very specific circumstances, is an agent will come to your door. And the agent will have a badge, etc., etc. No. Yeah, so basically, if you get a call from the IRS, that's a scam. The only time it's not a scam is if you call the IRS and when you get put in the infinite waiting line for an agent to pick up, you say, "Call me back." And they only give you that option sometimes. I know this because you are nigh 100% correct, Satetica. Because, and this is fun. This is fun for me. So the TCJA, Tax Cuts and Jobs Act, which is the most recent complete overhaul of the tax system, did away with an item on Schedule A that allowed for expenses that you had to pay for like a W-2 employee. So like if you had to have a home office as a W-2 employee, and because I didn't do taxes in 2017, I was coming in. Sorry, that was 16 and earlier. I was not doing taxes for 2016. I started working in tax stuff for like the very tail end of 17, and into 18. Started in 18 more fully. But basically, as a W-2 employee, certain things that you spent outside of your work. Oh yeah. It hit a lot earlier. I graduated in 2019. I was 21. And the reason that I was doing... Yeah, I graduated in 19, and then I immediately went into the workforce, pretty much. I started in June of 2019, working. But I did do tax work while I was in college, just a little bit. Mostly because it was during the summer, when I wasn't. It was like the first summer, because I was helping out, because I wasn't... That was before I moved into my apartment on campus. Yep. But I have been doing finance-related things, such as bookkeeping and stuff, since I was 13. I've been in this work for a long time. I got started early. I was managing the books, not managing the books, but helping manage, doing clerk work, when I was in high school. Well, we weren't doing taxes then. I was doing bookkeeping work. But I actually have had to work on tax returns for young children. I have had to do tax returns for young children. And that's because TCJA fucked with kitty tax. Legitimate lemonade stand. Nah, most kids don't make over the standard deduction. Kiddy, K-I-D-D-Y. But yeah, kitty tax, meow meow. But yeah, back to what I was talking about with TCJA. TCJA messed with Schedule A deductions for people who were traditionally employed, which meant that most people were now no longer using standard deduction. Because it used to be that you got a personal exemption and standard deduction. Personal exemption was you breathed. You were a breathing human being. Here is a deduction on your taxes. Here's an exemption from tax. And then it was the standard deduction for here's kind of what you need, what you were doing for living. So TCJA got rid of the personal exemption and upped the standard deduction. And so most people, and then got rid of the where you could write off certain expenses for being traditionally employed. So most people just use standard deduction. Because it's like really high too. It's like super high. And because it takes your interest, like mortgage interest, property taxes, charitable deductions, and medical expenses. If it's over 7% of your AGI, you get like $1. So if my AGI is $10,000, I have to have over 7% of that. So $10,000 times 0.7. So I would have, if I spent $7,001 on medical out-of-pocket expenses, this can't be anything that was paid by insurance, I would get, on my Schedule A, $1. It's really for people who have had, like, disastrous medical expenses. So, that's fun. Yeah, it's really hard to hit it, but I have had people hit it. I have seen clients hit it and actually have it, like, push them over to using Schedule A. Itemized deductions. But yeah, and property taxes, so it's medical expenses, property taxes, sales tax, and like state income taxes, but there's a limit. You can only take $10,000 up. You cannot take greater than $10,000 of taxes. That is the SALT limitation, if I believe is correct. So if you pay $20,000 in your property tax, say you live in a very property tax high state, you can only take $10,000 of it on your Schedule A. Surprise. Then it's mortgage interest and charitable deductions. But yeah, most people don't take Schedule A. It's not common. Of course, we always look into it for clients to say, would this help you? Most people don't have close to it. Yep. Yeah, that's usually how they make up for it. So. But yep. Yeah, as well. This is a fun rule. If you have more than one home. So say I live in North Carolina. I have a vacation home in California. I also have another vacation home in Maine. I can only write off the property right on my itemized deductions. Put on my itemized deductions the property taxes for 2 of those properties. The one that I currently live in and whichever the first house I owned was, I believe is the rule. First house. So you cannot have more than 2 houses accounted on your Schedule A. Wild rule. It's a wild rule. It does matter. If they are Airbnbs, you will write off the property taxes as expenses against that income. And it will be on a Schedule E, rent and royalties. If it's a vacation home that you leave empty, and it just goes on Schedule A. Taxes are very complicated. Mm-hmm. Yep. We have some clients that have like a lot of rental houses. Like I'm talking like more than 5. That's a lot. It's always fun to do their taxes. Yeah, more than 5. Mm-hmm. I don't know. Probably if it's your second house, then it's Schedule A. Are you renting out this cottage? If not, then it's just a second home. If you're renting out the cottage, it is a rental house. However, you can rent your house for up to 14 days. You can rent your home for up to 14 days without reporting it as income with the Augusta rule. I would believe that would be considered part of your primary home because it's on a dock. We did see, I think we might have saw a houseboat, yeah. I don't know how the fuck houseboats work. I couldn't do a houseboat. I'd throw up so bad. I would just be throwing up. Where's... Oh, it doesn't do the... Fuck. Yeah, I don't get houseboats. I don't get houseboats. Nope, there's none. There's none. Not that I'm aware of. I know that there's rules for like service, like therapeutic animals. Like if you have a therapy dog, if you are a therapist and you have a therapy dog that you use in your practice, the care and maintaining of that animal, so like vet visits, food, grooming, that kind of stuff, is deductible because you're using it in your business. Neither. Neither. Service animals don't count anywhere. It sucks, they don't count anywhere. Yeah. I didn't want to do lo-fi, so I was like, I'll do Animal Crossing. That's chill. Yeah, sheepdogs. Nope. Mm-hmm. Yeah, sheepdogs don't get anything special. Ugh. Well, I did a little bit of research and I talked to people about I owe Tom Nook 5,000 bells. About what to do, because it would be income. It technically would count as income you made using the cat. By vehicle of cat. But like the IRS has very specific rules for like for business deductions. So like my desktop computer, Mortimer. Yep. The IRS says that anything that is over, our office's rule is $100. If it's over $100 and you expect it to work for more than 1 year, then you have to report it as a asset. And assets are fun because assets depreciate, which means that say for easy math, I have a $500 computer. It is going the class life. So how long the IRS says this type of asset lives for. Subscriptions are just expenses. But like, so say $500 computer. We're going super low for ease of math. The IRS says the class life of a computer, and I don't have this in front of me, this may not be right, is 5 years. I think it's close to right. Yeah. For leases, that is a rent payment. That counts under rent category, and it is just an expense. So it depreciates over 5 years, so that means every year I get to take $100 of expense for my computer. However, what the fuck do you do if it's a model? Like my model. What if I spent $1,000 on this model? Just this one model. That's more than $500. That's more than $100, and I expect to use it for more than a year. However, it's not a physical asset. What the hell do you do with that? So, as I said before earlier on in this stream, if you made it yourself, there's no monetary value attached to it. But yeah, as I said in the earlier this stream, digital economy VTuber stuff is still very much in the gray area of the IRS. The IRS, in my research, has released no guidance on what to do about a digital asset that needs to be depreciated. So, in looking up a couple other things, nope. I have been able to figure out So if you pay for rigging, that's just paying for a service. That's just paying for a service. It makes the art usable, but it's just the service. Or like a 3D model. That is an intangible asset. The IRS, thankfully, has a special class categorization for intangible assets called amortization. Correct. It's just putting bones in a puppet. Rigging basically just sets the puppet up. It's not the actual puppet itself. But so the IRS has a special thing called amortization, which functions very similarly to depreciation. It's just a little different, and I don't know all the ins and outs of those differences. So it would be another thing where I spend $1,000 on this model. It's going to amortize over, say, 5 years. I would get to deduct $200 per year to account for the wear and use of this asset. This is where I don't think a lot of VTubers are aware of that at all. I probably could count on one hand VTubers who are aware of that issue. Who are aware of that. And it would be me. Because this is a really niche VTuber problem. People sell their models. Resell them. Nope. That is the problem. That is the problem. So say you graduate before 5 years. Say you're a VTuber for 2 years. That asset is now out of service. You only used it for 2 out of the 5 years. You only get to deduct 2 out of the 5 years. Sucks to suck. It's rough. So say you sell your model too. That is the sale of an asset. So I spent $1,000 on my model. After 5 years, we are going for absolute easy peasy math. After 5 years, my model has completely fully depreciated. In the IRS's eyes, it is now worth a big fat 0. It is worth nothing now. It has completely been used up. So, what happens if you sell that model? Say, in 2 years, I sell this model. Whatever. Well, let's go back to the example I was giving. So, $1,000 model. After 5 years, it's completely 0 worth to the IRS in the IRS's eyes. That next year, I decide I'm done being a VTuber. I'm going to sell this model, though. Excuse me. I sell the model for $2,000. I've gotten super popular, and whoever is going to get this model is going to get, follow that surge of popularity. Somebody pays me $2,000 for this model. That's income. And because you have now fully depreciated, I don't know. I know she's... Yeah, I don't know the full ins and outs of her stuff. I know she sold, but I also know she didn't, and that I don't fully understand that portion. But so because the IRS... Gotcha. That would just be multiple people as like subcontractors. Is my understanding following American employment laws. Unless they were employees, but yeah. Yeah, I have no idea how the ownership stuff works. But so say I sell to person B for $2,000 my model that I paid $1,000 for, and it is completely depreciated. In the IRS's eyes, that model is worth $0, and I just got $2,000 for it. That is $2,000 of gain. That is capital gain. At a 15% tax rate, $300 worth of tax. Do you want to guess how many VTubers who have sold their model have done any of this? I would not bet you money it's 0. This is an issue. We're functioning on the fringe IRS awareness. Does that mean people are gonna get away with stuff? Yeah. Oh yeah, I've seen it. I've seen quite a lot of it. Just recently, someone who was outed for being a shitty person tried to sell their model. I was like, I don't think he's aware. Yeah, so, there is a, yeah, it was a moment. I'm like, you've just been outed for sexual harassment, and you're trying to sell your model? Oh yeah. The original artists were like, we didn't give him the okay to do that. Yeah, so it was a thing. It was a thing. That was like a week ago. It really does. So yeah, but yeah, I've seen quite a lot of people sell their model because they're done VTubing and they, you know, they don't want the model to go to waste, etc., etc. So do I think those people have reported it as sale of an asset? No. Because people don't understand taxes because it's not taught to us. The only reason that I know this much is because I've been immersed in the financial world since I was 13. I'm turning 26. Literally in 30 days. I've been in this world for half of my life. Yeah. Yeah. Oh yeah, the big corps have whole ass accounting and law divisions. Yeah. Ugh. Yeah, taxes are not taught to us. They should be. How much trouble you can get in. Just money-wise. People also get a lot of advice from people they shouldn't. Your average Joe Schmo, saying, oh, get an LLC, it'll save you money, or, oh, start an S-Corp. It's... yeah, probably. But like, 90, like a lot of those people are just trying to sell you a service. Get you to pay them to do a thing, and they're not going to sit with you and talk about the reality of what that's going to do for your situation. There is a tax credit, I think it is. It might be a credit, it might be a deduction. I'm not 100% certain because those are different. If you are caught in a Ponzi scheme. There is also you can write off bad business. Not So like if you invested say $200,000 into company A with the understanding that you were going to get your money back, and then company A completely goes under, that is a worthless investment. And there are rules for how you can write that off and get that as a loss and, you know, get that on your tax return, et cetera, et cetera, et cetera. There's a lot of ways that people who have fallen into shitty situations can get stuff back. And there's a lot of ways in which people can get stuck in shitty situations tax-wise. And that's... no! Not anymore! So that's another fun thing that the TCJA did away with. So it used to be that if you had... like, if someone stole, like, some major property from you, you could write it off as a, like, casualty loss. TCJA changed that and said the only time you can write off a casualty loss is when it's in a federally declared disaster area. So, and I haven't worked in pre-TCJA tax returns recently. We've done like a handful of them. Yeah, so there's a lot of people who are like, you know, I had like a tornado came and like blew off my roof, and I had to get my roof completely redone and all this stuff, and I had to pay, you know, money outside of insurance payouts. And it's like, well, was that tornado a federally declared disaster? No? You're shit out of luck. That part irks me a bit because I'm like, oh, I wish that wasn't the new law. There's a lot of stuff that TCJA did that made things not good. Yeah, it was a secret tornado. Yeah. Yeah, TCJA was a like complete redo. Complete change of a lot of stuff. The tax forms completely changed too. That's where we got the if someone has kids and they never tell the IRS and never get them SSNs, they will have to go. Okay, so you actually don't get social security numbers from the IRS. You get social security numbers from the Social Security Administration. And those are... You're good. I believe you have to have... I believe it... I don't know because I haven't given birth. But I believe... you cannot have a child that is born in the US that does not have a social security number. Because to get a birth certificate, you have to register them as a new person, which... well, but however, if you want a birth certificate, which you have to prove that child exists, to get anything, I believe that is at the Social Security office too. I don't know that part. I don't know that much in that section. I will say a lot of people think that we work with the Social Security Administration. A lot of people also think that we work in like Medicare. They're like, how do I do this thing for Medicare? And I'm like, I don't know. We don't deal with that. I'm like, if I knew, I would tell you, but I don't deal with that. I file taxes. Or they're like, hey, this county thing. I'm like, I don't know. Man. People seem to think we can do crazy stuff. They seem to think that we give them refunds. Yeah. There's... like, yes, there are things that we can do and ways we can, like, help you maneuver things to where your tax liability can be decreased. But also, if you just fuck up your withholding and you owe money, that's not us making you owe money. That's people don't understand that portion. People don't understand that portion at all. Yeah, a lot of people think these things are linked together. People think Social Security checks, we know how to deal with those. The most we know how to deal is when the Social Security Administration is like, hey, your income went up. We're reducing your benefits by X. Yeah, you know, understandable that H&R Block might do HR. We kind of know, like, to say, yeah, your income increased. They manage benefits based on your income. But, like, we've had people be like, I got this check. It says this. What does this mean? And we're like, I don't fucking know. I don't fucking know. You know what? I'm gonna tell kind of a horror story. That people didn't know. Fun things that people didn't know. Do you guys remember, or were you at all aware of the ERTC, Employee Retention Tax Credit? It features in a lot of recent scams, so you might. And also it's been in the news quite a lot. Yes, EITC, Earned Income Tax Credit. That's when you made so little money that the government is giving you a credit. Like, look, bro, you didn't make enough money. We're not gonna make you pay this amount of taxes. Especially if you have kids, they give you Earned Income Tax Credit. But the Employee Retention Tax Credit, it was a COVID payroll deduction. It was, you could get a refund of some of the payroll taxes that the employer paid for keeping employees on in COVID. People did not read the fine print of this credit. Was it a great thing for some people? Yes, absolutely. Some companies desperately needed it. Then came the problem. You see, when you pay property taxes, payroll taxes, when company X so that was the PPP, Payroll Protection Program. That was money that was loaned to employers for the for keeping people on during COVID. Yeah, so this is all employer stuff, but people are scamming people for their information, saying that they could be applicable for the ERTC credit. You're not. The ERTC is pretty much shut down now because so many people were getting it when they shouldn't have because the rules were confusing. But also, the problem. So when company X pays payroll taxes for their employees, they write off that as an expense because they no longer have the income that went to paying that expense. So that's an expense. So then, say that's 2021, you pay in your payroll taxes. In 2022, you apply for the ERTC credit. You say, hey, IRS, I paid my payroll taxes for 20 and 21, and, I would like some of that back because I qualify. Whatever, we never dealt with it, actual filing for it, so. The IRS goes, okay, here's $10,000 back per year. And here's interest that you earned because we were keeping your money, quote unquote. So that's income. Yeah, that's income because that's a refund of an expense that you paid. People didn't realize that, they then had to go back and amend those tax returns. So you got $10,000 for 2020 and 2021. You now have to put in $10,000 more income in those two tax returns. So you have to amend your 2020. Say I got $10,000 more because I got ERTC credit. File that tax return. Amend the personal tax returns that are connected to that business. Anybody who got a K1 from that business. Then you have to amend the 2021 tax return for that business, carry over anything that changed from 2020. Now say this year also got $10,000 more in income. Amend that tax return, file that tax return, amend the personal tax returns that are connected to that business for 2021, and then you have to go and change 2022 to carry forward any changes from 2021. As well, you now have to report the interest income on 2022. See, it makes sense that a refund of expenses would be counted as income. The thing people were not expecting was that it was retroactive and you had to go back and amend tax returns for it. Nobody was fucking expecting that. Nobody knew that was coming. It was hell. People didn't know that we were going to have to amend their personal tax returns. They didn't know that meant we were going to have to open up old tax returns and they were going to have to amend their bookkeeping. It was fucking hell. See, that would be great. Honestly, if the IRS was able to completely codify everything and get it all good, I would happily let them do it. How many people are going to trust the IRS to do that, though, is the problem. And that is the problem. People are not going to trust it. But yeah, we are slowly approaching the end of this stream. Thank you, everybody, for being here on Tax Talk. Tax Talk. I like... That is the current thing that's going on. H&R Block and Intuit and other things like that have attempted to stop IRS Free File because, yeah, Intuit wants the money. They want to be paid for people having to do a service. People have to do a service, and they want to be the ones that people pay. So it's an ever-evolving issue. Pizza sounds yummy. I've got dishes to do tomorrow so I can eat my salads. But yeah. Pizza. I was gonna end this with a fun fact. And I can't remember what fun fact I was going to use. I completely forgot the fun fact I was going to tell you guys. Pizza. 私の晩ご飯はブロッコリーとシラチャメヨ。 that's the fun fact I was thinking of. Did you know there is an option currently in our tax software to ask the IRS to send you your refund in Bitcoin? I hate it. Yep. You can ask the IRS to send you money, to put your refund into like savings bonds, to put your refund into a retirement account, I think, or Bitcoin. No. No, I haven't even done my two for, I haven't even done the one for Phantom and the one for Felina yet. I'm so behind. I'm so behind. Yeah. How am I doing with that, by the way? Bad. I haven't even started anything. I've been so preoccupied with recording things for moving hiatus that I haven't done anything else. And dealing with getting stuff ready for anniversary. Many things going on. I don't want to be... I haven't even started looking at stuff even. I've listened to the songs twice, maybe. Haven't even started looking for background music, or off vocals. It's a fucking time. Let's see. I did a bit more recording today, so I have left 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I have 17 more videos to record. 17 more videos to record for pre-recorded streams. No! No! I can't rap. Lower the difficulty. Make me sing Ifudodo. No. Pomp and circumstance. No. If we hit the stretch goal to get lewd art for birthday, I may sing Ifudodo. I may try and cover Ifudodo. I've never sang that song, but you know, it could be fun. Yeah, I know. Oh yeah, rabbit hole. Look. We'll see. Rabbit hole is fast. And rough. It is a shorter song than Ifudodo, though. So we'll see. Maybe if Bunny Suit wins the poll, then we'll do rabbit hole. I don't know. There's many choices that we can do. I'm sleepy. Taxes are not, you know, the most entertaining thing for people to listen to. I enjoy talking about them every so often. Talking about my work can be fun. Yeah, I'm sleepy. So, yay! Well, I'm glad you enjoyed it, even if you're a weirdo. Yeah, I'm ippy. Nemlio. Dang. The head pat stayed. Oh my god. I'm glad. Yeah, we're all weirdos here. You're all my weirdos. And I love you all. I think I'm gonna end up calling stream a little short. Because I'm fucking tired. Yeah. Alright, well. Let's, pop over here then. Alright. You all know the usual song and dance. If you're not already following me on social medias, I'd appreciate it very much if you did. Yeah, the EP allegations. As well. Oh no! As well, if you're not already in the Discord, I'd love it if you joined in. Zatenica, put your secret children in there. Have your secret children join the Discord. Have your secret children join the sub to YouTube. Because we're at 523 public watch hours in YouTube's. We need 3,000 to unlock YouTube membership. And we need 4,000 to do full monetization. So we are 1/8 of the way to full monetization. And 1/6 of the way to YouTube membership. Woo woo! Yeah, watch those Prince VODs. Tisk tisk tisk. Alright, well. I hope. Bye, Zettle! You're just in time to claim the toe bean stamp. Thank you so much, Zettle. Thank you for stopping by. But yeah, oh yeah, I already said the song and dance. Oh yeah, we're the I distracted myself. Yeah, it was fun. Arigatou goitashimashite. Alright, well, I hope you all have a wonderful morning, afternoon, evening, whatever time it is for you. Well, without any further ado, bye-bye!